All right. All right. Hello, everyone. My name is Lou Kerner, and welcome to today's webinar titled Accessing Private Investment in Crypto Web3 Market Leaders. I'm with Crypto Oracle, a crypto advisory firm. I'm also a partner at Blockchain Coinvestors, a crypto fund-to-fund. And this topic today is of particular interest to me as I started the first private shares trading desk on Wall Street at Wedbush Securities in 2010. And it turns out that that we were right on the value to be created in private shares, but wrong in terms of market readiness for the product to scale in 2010. But as everybody on this call is likely aware, the world is changing rapidly today as crypto Web3 is ushering in this new wave of wealth creation, as well as new tools for individuals to access these opportunities. And so we're joined by two experts in this emergent asset class, Susan Miller, Chief Growth Officer at Linqto, and my colleague, Mitch Mechigian, Chief of Staff at Blockchain Coinvestors. So welcome, Susan, welcome, Mitch.
Thank you for having us.
The first half of the webinar will feature each of our guests sharing their thoughts for 7 to 10 minutes via slides, and then we'll open it up for Q&A with the audience. So if you have a question for our panelists, please type it into the Q&A section on Zoom. And if we pick your question, we'll let you know via the chat on Zoom. And when it's your turn, we'll bring you up on stage as a fellow panelist. This call is being recorded and will be available for replay starting tomorrow. And with that, I'd like to turn it over to Susan Miller with Linqto. So Susan, you can share your screen.
Fabulous. Okay. Should be able to see my screen here. Yes.
Yes.
Yep, you're all good.
Great, perfect. All right. Well, I'll start by just giving a brief introduction of who is Linqto and my credibility to join you all today. Essentially, about 2 years ago, given in part shifts in the public equities market, we found that only 2% of the average investor, of accredited investors, folks who are eligible to participate in private markets, were actually participating and actively investing. And so we were wondering, well, what is that? Why is that the case that so few people are actually participating? And really what you see is there are traditional reasons with Wall Street, some of the traditional players, A, they're very expensive, and B, they are very time consuming. And so the average fees for a typical private equity investment are going to be a 20% to carrying fee plus a 2% GP fee on top of that, of the average investment of $7.5 million. And so when you think about, who has $8.2 or so million laying around to take a flyer on a private company that may or may not go public. And what is more, typically the broker-dealer relationships with the firms who have facilitated these transactions have been such that, I might come to you and say, hey, Lou, I want you to find me a company, or find me shares of Ripple or Uphold or Whoop or some, fabulous private company. And whoever's facilitating that transaction typically works in a broker-dealer dynamic where they'll find the shares. But for all the reasons on the right-hand side of this page, it may or may not actually come through. And so it brings us to today of, okay, so then why are folks actually investing in the private market? Or, why do you want to have access to this? Well, when we think about where true generational wealth is being created, it is right now typically between a Series B and a Series F before a company goes public or before they have a big liquidity event, where they are experiencing that exponential growth. The type of thing where in the past we used to say, hey, we want to be in on the early IPO. That action is not where the true growth is really being generated. And so then members came to us and they said, well, how can you help facilitate access and in a way that is more affordable and guaranteed? And so the other challenge that folks have is figuring out, if you look at just last year alone, 507 new unicorns were minted. So when we think about a unicorn, it's a private company valued over $1 billion. Right now, there are over 1,000 representing trillions of dollars of value. And so the other challenge that folks have said is, it's hard to access. It's typically been reserved for truly the elite of elite, wealthy or institutional buyers like a sovereign wealth fund, hedge funds, PE or VC firms. But then two, it's been priced, in the millions for a typical transaction. And then it's challenging to find the data on private companies and figure out, well, which are the right ones that we should be investing in. But for right now, when you think about the public equities, inflation, pending recession, and the volatility that we're seeing, companies like the blockchain and the Web3 companies are a really interesting investment because they are seeing substantial exponential growth. And because of the way private market valuations work, typically on a priced equity round, that might be happening every 12 to 18 months. So you don't see the daily volatility that you would with a public equity investment. And so right now, some folks are saying, hey, this is actually an interesting safe haven from the public markets. And so not the sales pitch on Linqto, but suffice to say, those were the key factors that really led us to start the company, albeit during a pandemic is a challenging place to start, challenging time in history to start a company. But given the nature of companies like the private investments that we've made, and I'm happy to chat more about these if folks have questions, but to name a few, Ripple Labs, BitPay, Dapper Labs, Uphold, Whoop, Eat Just. These are the types of companies where we have invested and on behalf of the membership, then made those shares of the pre-IPO or late stage private companies available at a $10,000 minimum investment without a management fee, et cetera. So just to share a little bit about how we found ourselves to where we are today, what we're seeing in the market. And then as you can see on the page right here, just a couple examples of the types of companies in which Linqto is investing. I can turn it back over to you, Lou, or I can keep on.
Sure. Let me ask you a couple of questions.
Sure.
Because you've been doing this for a while now. First, how have you seen the market evolve over the last few years as you've seen this giant growth in the number of unicorns being minted?
Yep. So I'll jump back here and share the number of unicorns. It's interesting. In India alone, by 2027, they predict that they're going to have another 300 unicorns. And so on the one hand, you think initially, well, are the valuations out of whack, and how are the valuations determined? But on the other hand, we're seeing a dampening actually this year and toward the end of last year and how in the, VC market and PE. And so things are becoming, let's say, a little bit more conservative, except for in the digital asset space, where we're continuing to see amazing trajectories from companies. So if you look at a company like Ripple Labs, where just 6 months ago or so, their last valuation round was as a pre-IPO, private company. And I say that because although not all private companies will go public, Brad Garlinghouse, their CEO, has said that it is in the cards, their plan, that they plan to take the company public. So their last valuation was $10 billion. And they're in January did a Series C, a buyback of their entire Series C at a $15 billion valuation. So the right business model, the right companies, particularly in the digital asset space, is really where we're seeing a lot of the private companies continuing to have that really serious, high promising growth trajectory.
And so the companies that you're accessing, are they largely in the US or is it global?
So they are global, and our investor base is also global. So we have folks from all over the world. The SEC has, as you can imagine, probably more strict guidelines than some other countries. So there are accredited investor rules about who can invest in our companies. We have to abide by the SEC's rules. But the nature of the companies that we're investing in, they could be anywhere. I would say probably the highest concentrations are Bay Area, Silicon Valley, and then likewise, maybe New York. And actually Florida has a number of companies. I think they're kind of positioning themselves as the next digital asset center. But that's another place where we're seeing a lot of companies popping up.
Yeah, interesting. It seems like Lisbon is picking up a lot of steam in Europe in terms of companies moving there.
Absolutely.
And in terms of your customers, are they mostly US or are they also global?
So they are global. I would say the biggest concentrations are in the United States. But that said, next week, the leadership of our company will actually be in Lisbon hosting our global investor conference, where we will be hosting folks from all over the world, as well as many visionaries, luminaries in the space of both private companies, but also a lot of focus on digital assets as well.
Is this the first time you've done a conference like that?
So last couple times we've hosted these sessions for investors, we have done them virtually, again, because of COVID. But we're really excited. Over the past month or so, Bitcoin Miami, we hosted an event for investors in Miami. We were just in Dallas and Phoenix. And then next week, really, this week we'll be in Orlando, but then next week, really pulling together a large group of folks and bringing in a number of thought leaders, specifically in person in Lisbon. So this will be an event to remember, but we're very excited about it.
Wow, sounds terrific. So thanks a lot, Susan, for the presentation and for sticking around for the Q&A. And we'll now turn it over to Mitch Mechigian with Blockchain Coinvestors. Mitch?
All right, thanks, Lou. Hang on a second here. So I think actually we have a lot of overlap, Susan, so thanks for that. That was super interesting. So hello, everyone. Thanks again for taking the time to join us today's webinar. My name is Mitch Mechigian, and I'm a partner at Blockchain Coinvestors and CFO of our blockchain-focused SPAC, whose ticker is BCSA, which we can talk about later. So again, yeah, I think everything Susan said was spot on, and I think what I have to say just further supports her points. You know, and at Blockchain Coinvestors, we're an investment manager solely focused on blockchain and Web3 companies and projects. So what I'll talk about today is some of the strategies we're employing as a fund for accessing private shares and how, you know, individual investors can get involved, and why we think that's actually going to yield attractive returns in the medium term, specifically for blockchain and Web3. So I'm just going to show this for the avoidance of doubt. This presentation is purely educational and should not be construed as investment advice. So today I'll briefly cover 3 points. So the blockchain and Web3 sector is institutionalizing and maturing, and we actually think some sector dynamics point to an increased amount of liquidity events in the medium term. And there's actually several different routes these enterprises and projects can take, and so we'll touch on those. Finally, in order to capture these returns, again, I'll go over some of the strategies that we're employing at Blockchain Coinvestors to access these private shares in advance of these liquidity events, as Sudan alluded, where that's the real value creation is in those later stages as they take those final steps. So we won't spend a lot of time here, but it's just very important to note that 2021 was a breakout year for blockchain and Web3. We've laid out some statistics here we think illustrate this point. So the market capitalization touched over 3 trillion in value, excluding private market and public market enterprise valuations. The industry is now generating large amounts of revenue. We actually think it's closer to about 100 billion today. For millennials, it's intuitive for them, for the digital natives, that cryptocurrencies and digital assets, are here to stay. And so we think this is something that's going to catalyze growth in the medium to long term, as well as that segment of the population becomes a larger, portion of the adult population. But really important here are the final 2 or 3 points, which is that, according to Deloitte's survey, 76% of financial leaders expect digital asset adoption in the next 5 to 10 years. And we're seeing more and more companies go public. So now there's 20 pure play publicly traded blockchain companies, including 9 listings in 2021. So we're starting to see it, but still far below what you saw in the late stages of the .com boom. So really the sector is on this precipice, and that's something I'll allude to later. So this is a trend we think is going to accelerate in the short to medium term. And you can also see on the bottom there, several institutions which launched dedicated blockchain or Web3 products in 2021 as well. So now, why a liquidity event? Why go public? Why sell? And so, we think there's 3 main reasons. This isn't all of them, but kind of 3 key reasons. The first is liquidity for shareholders. So often early investors are able to mark up their returns during follow-on rounds, but none of those returns are actually realized. So liquidity event gives them the opportunity to realize the return, and if they have a fund structure, return capital to their own LPs. From the company perspective, we have capital needs. So growing business with ambitious projections often require large amounts of capital to fund their business plans. So liquidity events, particularly IPOs and SPAC IPOs, can provide this capital. And then finally, there's an element of prestige. This is particularly relevant for public listings. So public companies are often seen as more legitimate than private companies, largely due to regulatory and shareholder scrutiny, as well as listing requirements. So now applying these metrics to blockchain and Web3, we see that blockchain has received an incredible amount of investment, particularly in 2021, which is by far the largest funding year on record. Again, most of these are going to be fund structures, typically 7 to 10 year term life. We also see that the rounds are getting larger and later in stage as the blockchain sector matures. So from a shareholder perspective, we can assume a majority of the investments are being marked up, but they still only represent unrealized returns. So in most cases, the investors have not yet had a chance to sell down, realize that return, and return capital to their shareholders. So we think it's safe to assume that you're going to start to see significant pressure from shareholders on companies for liquidity events so that they can realize the returns in kind of a 3 to 5 year time horizon. In a similar slide to what Susan showed, we also have a glut of private blockchain and Web3 private unicorns. And so we count, and the block counts, approximately 70 private blockchain and Web3 unicorns, specifically in this sector. So you can imagine these companies have growing capital needs that need to be met in order to deliver on the business plans. But also many of these companies are going to start to see a benefit in a public listing due to the prestige it bestows. So you can imagine Circle or Coinbase, if you're familiar with the blockchain sector, they both are going public or have gone public, and their product USDC obviously will benefit from the prestige and scrutiny that those companies face in the public markets. So here we think that there's a growing number of private enterprises that are either going to start to access the public markets or into a period of consolidation via M&A. And so what are the available options? So I've laid out 5 kind of key options. It's certainly not exhaustive, but it provides a good framework. We won't go through all of these in detail, but the SPAC, bank-led IPO, and direct listing, those are public listings. And so they tend to be the preferred choice for high growth tech companies that are founder-led. And the key reason being, in a go public event, the existing shareholders actually typically retain most of the ownership of the company, and therefore most of the existing upside. So you can imagine if you're a high growth company with ambitious projections and you are confident you're going to meet those projections, you typically don't want to sell down everything. That being said, We've seen high growth companies sell outright in corporate M&A and PE buyouts, depending on individual cases. I'd point out Wire, which was a portfolio company of ours. They just announced a M&A sale to Bolt in the largest blockchain related acquisition. So there's always idiosyncratic reasons why a sale might happen. But overall, we would think the trend, as in previous tech revolutions, would tend towards the public listing route. I also should just point out that I left off this chart the potential for tokenized projects. We haven't really talked about that today, but so in Web3, many projects are choosing to tokenize, and these projects will typically actually have that liquidity profile, that public liquidity, so to speak, much earlier in the life cycle. So it's kind of changed the game, and we'll talk about one of the strategies we employ for capturing those private shares still, even though many projects are now choosing to have a public token earlier in their life cycle. So how are we at Blockchain
And Mitch,
Coinvestors?
what's generally the difference between those companies that decide to tokenize as opposed to list?
So, it's a good question. You have companies that have the option to do either, but I think that your more standard companies that are servicing traditional markets, traditional investors and consumers are often going to see the benefit in that public listing and that kind of traditional sense. So you think of Coinbase versus maybe a decentralized custodian solution or DEX. Coinbase, if you're going to be suggesting to, for instance, my father or someone I know how to get into crypto, it's very easy to point at a Coinbase and say, look, they're publicly traded, they have audited financials, this is a legitimate entity, versus some of the tokenized projects. If you're not as familiar or not digitally native, that can seem a bit scarier. So I think there is benefits for those traditional companies. One of the major benefits for tokenization is it solves the cold start problem, right? So it allows you to essentially monetize and expand your community much faster and reward the users of the community. So depending on kind of the segment or market you're going after, and one we worked with well is Brain Trust, which is a platform which connects companies and contractors. They found a lot of benefit. They started as a company, they actually migrated to the tokenization route because they found that by offering a tokening to their community, it enabled them to catalyze growth. So it will just depend on companies, but that's why, as I'll go over, some of our strategies enable us to capture both, because we think there's always going to be those companies that want to stay in the more traditional route, but we do know that there's this new massive opportunity created via tokenization.
Sure, thanks.
And so how are we at Blockchain Coinvestors accessing these private shares in advance of these liquidity events? So we have a very different strategy versus Linqto, which is obviously a phenomenal company. We're more of a traditional fund strategy with our own spin on it, essentially. And so we operate a three-pronged approach to the private markets. The first is a family of VC funds. So through our fund of funds, we're investors in more than 40 early stage and seed round focused blockchain specific funds. And through those funds, we're indirect investors in more than 400 blockchain, crypto, and Web3 enterprises and projects. So essentially the strategy here, Essentially the strategy here is that we want to capture all of the winners in the space and own all of the trillion-dollar companies that are going to be created, at least in some small way. We're also early stage token investors in a concentrated way, which allows us to take stakes in projects before their tokens are liquid, before they go on to exchanges like Coinbase and Binance. And this is really important, right, with this new paradigm in that, essentially if you're out there buying Solana or Ethereum, you are a venture capital investor in a way, because those are not fully fledged products yet. But still, there's a massive, value benefit of getting in before you can actually buy that on Coinbase or Binance. And so if you can utilize your network connectivity in the space and the way we do, then you can actually access those tokens before they're listed, before they have their main net launch. And then finally, I'd also point out that we're mid-stage growth investors. And so this is more of the standard kind of pre-IPO companies on the path to M&A, as I pointed out with, and this allows us to take concentrated positions into the emerging category leaders as they prepare for the liquidity events. And you can see more detail here on the structure of our full platform. And I won't spend a lot of time here, pitching the fund, but we have 3 fund of funds investing. that one early stage token fund. Again, those early stage token investments tend to be very early in the formation process. So they're smaller investments. So it's a smaller fund, typically check size 500,000 or 250,000. In the mid-stage growth category, we actually have a few different ways to invest. So we have our dedicated fund for our larger allocations, but then we also operate an AngelList syndicate for allocations below $1 million. And so actually anyone who's an accredited investor can head to AngelList. You can sign up. You can sign up to our syndicate, or there's tons of very high quality syndicates out there. And then you can self-subscribe to deals in the private markets that you might find interesting and actually get access to private market shares that way. And then finally, I mentioned this briefly up front, but we also operate the largest blockchain specific SPAC. And here the idea is to help blockchain and Web3 companies with that final stage of their life cycle and partner with them as they become public companies. And so you can see, we're really excited about blockchain kind of across the investing life cycle, starting with early in the fund of funds, investing through the mid-stage growth rounds, and then helping them go public. And as you saw at the beginning of the presentation, we really think in the next 3 to 5 years, blockchain will take that step and we'll start seeing that M&A consolidation, those go public events that you saw in the .com boom and in Web 2.0, and we really it's kind of the natural progression of the innovation cycle. So again, just to wrap up very briefly, and I'll pass it back to Lou or Susan, blockchain, again, it's maturing, it's institutionalizing. You're going to have those sector dynamics being pushed by the shareholders, but also the size of companies that are going to beget a lot of M&A activity or go public events. And in order to capitalize on those returns, there's several strategies that funds can employ in order to still capture those private tokens, those private shares in advance of those events. So that's it for me. Thanks.
Okay, thanks, Mitch. Let's see, we'll open up to questions from the audience. And it looks like the first question that we have is from Pierre. So Pierre, going to open up your audio and video. And
hi, good afternoon. Can everyone hear me?
yep, we can hear you.
Okay, perfect. Thank you, Lou. Yes, my question for you, Mitch, is are there any concerns with your portfolio companies or any of the companies that are public? Any concerns with them obtaining public D&O and cyber insurance due to the increased scrutiny that we're seeing from the SEC? I know that they just mandated, or they propose mandates where it's requiring new disclosure requirements for publicly traded companies, as well as enhanced cybersecurity controls. And my reasoning for this question is due to the increased breaches that we're seeing with Axie Affinity. I think class action lawsuit with Uniswap. Any concerns from a risk perspective?
Yeah, that's a great question, and you're following it well. I would say on the one hand, having experience, so I'm CFO of our publicly traded SPAC, which is titled Blockchain Coinvestors Acquisition Corp 1 and is solely focused on blockchain companies. So we actually had to obtain D&O insurance. And so we were able to. And I think the only issue, and obviously Coinbase is public and, backed, and, like I said, there's 20 public companies now. So they are obtaining public D&O insurance. Could be very hard to get anyone to join your board or your executive team without it. So I think the only issue is that those companies, depending on the subsector in blockchain, might face increased cost, right? The insurers might put an extra risk premium on it, but I don't think they're going to have issues obtaining the insurance. But I think it's a great point and great question. Just like other sectors that might be more perceived as more risky. In terms of the second part of your question, cybersecurity rules, I think that there is a lot of news about blockchain companies having, hacks or what have you. But you have to remember the companies that are going public are actually just, enterprises, equity, debt, cap table, right? So for instance, in the Axie Infinity hack, Sky Mavis, the developer, wasn't actually hacked. Like that would be the entity that would go public. What was hacked was Ronin, which is right their side chain. So actually the blockchain was hacked. So it's not exactly one-to-one, though I'm sure the SEC will still, scrutinize it heavily. And then again, whataboutism isn't always great, but of course, other companies, other very big companies, Sony, US government, they all face massive cybersecurity hacks as well. So I don't think it's something that's, particular or specific just to blockchain, but it's something we're thinking about very, very closely. So I do appreciate the question.
Okay, terrific. Thanks for the question. Our next question comes from Alex Brown. Alex? Turn your, if you're still on mute.
Yes, I apologize. Hi there.
There you go.
I appreciate really interesting, and as an individual investor, being able to get access to these kinds of shares is really cool. So a few questions. I'll ask them all together for both of you guys. One, what's the minimum investment? Two, when you guys are underwriting deals, what, obviously you can't pinpoint it, but what's the expected time horizon, the range of the time horizon? And three, what sectors do you really like now, or what kinds of companies? And even if, if you can mention some of the things that excite you guys most, that would be terrific.
Okay, Susan, you want to start?
Sure. So our minimum investment is $10,000. So we have some folks who will say, gosh, I want to dip my toe in and I'll do $10,000. Other folks who are making an even larger first investment. But that's our minimum. So it's a pretty significant point of differentiation when we think about the traditional private market investments. Another thing it's probably worth noting, there's no we don't have any additional fees. So it's truly point, click, invest. There's not a waiting or time period, because through a special purpose vehicle or SPV, you're actually accessing our shares where we are the principal investor and are making them available to the market. And then in terms of, so that's minimum investment. And then in terms of some of the companies that I think are really interesting right now, I mentioned a couple, but I think, as we look across the blockchain and you think about different types of investment opportunities, I do like the idea of something that serves not just a speculative purpose, but has a business or many enterprise use cases for it. So for that reason, I do think Ripple Labs and XRP, again, not a financial advisor, but my personal opinion, I think those are, I think it's really interesting, the concept of facilitating cross-border payments and global transactions, and using XRP in particular as the bridge currency. We think about modernizing the antiquated SWIFT system that the large financial services companies have used. It's certainly innovative in banking. And then with the latest release that Ripple has coming out on the RippleNet early this summer, they've made a sizable investment in their DevNet around NFT facilitation. And I do think that we're going to continue to see investment in the NFT space. So when I think about, whether it's Ethereum or XRP, Solana, there are probably a couple different blockchains that I think are most interesting, again, because I think they serve beyond just a speculative crypto investment, that they're facilitating many more enterprise use cases. And then second, I love the concept of, instead of just investing in the gold per se, investing in the gold mine, if you will. So as a result, companies like Dapper Labs, where I love the NBA Top Shot as the most successful sports NFT out there. But I also like the idea of what's the engine behind the trend. So rather than me looking for the next CryptoKitties or the next, interesting NFT, thinking about what are the companies that are actually facilitating some of these more modern use cases. And so another example would be BitPay, where, mom and pop shops probably aren't going to really get into crypto transactions and taking Bitcoin. You can by, I guess, Wendy's and Subway and even a Tesla with Bitcoin these days. But one of the companies that is facilitating that is BitPay. So the mom and pop shop or the retail company never even needs to know anything about the crypto. They're using BitPay to actually facilitate those. And then I also like the companies like BitPay that are using crypto instead of, imagine getting fiat cash back. I do like the idea, again, as we think about the next generation of digital currencies, being able to get crypto back, or some of the more modern progression when it comes to personal finance as well. So those are just a couple companies that I think are interesting right now in the space, particularly on the digital asset side. And happy to talk beyond digital assets, but those are a couple I think are exciting.
That's terrific. So Mitch?
Yep. So our minimums vary because we have tons of different products. So you're starting at the lowest, probably the easiest to access. This is our AngelList Syndicate. So you can head to our AngelList Syndicate, self-subscribe, and then the minimum investment there is 10,000. So you can self-subscribe to whichever deals you want as they come live. I think we just went live today with one called Superworld, which is a super exciting company. The fund of funds, if you wanted to write one check, get exposure to 400 underlying companies, but none of which is going to have any significant weight in the portfolio. So more of like a decentralized basket. That is 250,000 minimum. And then our latest fund, which is the mid-stage growth investment vehicle. Again, so now more mid-stage series B, C, D, as those companies grow to those liquidity events, the minimum for that fund is 1 million. And then the second part of your question in terms of, different sectors, vertical, we invest across the technology stack, but we acknowledge that different areas within blockchain are coming to prominence or finding their use cases earlier than others. So kind of on the one hand, people have always been talking about these kind of like supply chain solutions or enterprise solutions. We actually think that those are probably the furthest away and not yet here. But we are taking a look at those. Really in the last year or two, DeFi, decentralized finance, that had a massive bull run and create a lot of value, and had some really interesting products being built from automated market makers to decentralized exchanges. And then more recently, we're seeing blockchain-based gaming is super exciting, we think, as you're creating these in-game economies, and it just seems to make a lot of sense. If you're familiar with gaming and the skins and things like this, that NFT should come into that. And again, like Susan said, we're more interested typically investing in the infrastructure. So those, game developers, rather than one specific, NFT. And then, in terms of, those are probably really the main ones. I would say that there's always the kind of infrastructure that supports the ecosystem is really a focus of ours. So you may have heard of like DAOs popping up, so we invested in a company that does data analytics for DAOs. So something like that's super interesting. So that really underpins what we're looking at.
Okay, thanks, Mitch. What about the regulatory environment, both for the secondary shares and as well as for the crypto markets? Susan, any commentary there?
So, I guess there are a couple big lawsuits of late where it appears what the SEC has been doing is essentially regulation by litigation, where with the Ripple Labs case, as an example, the SEC versus Ripple Labs, where they're saying that XRP, which they're a primary custodian thereof, the SEC is claiming that it is actually a security. And as a result, the 65,000 XRP holders are now brought into that lawsuit saying, it's not a security, it's a cryptocurrency. So that's an example. BitPay similarly was in a lawsuit, and from my perspective, again, with the SEC, on the one hand, it creates what an investor might call a special situation, where there's some outside force that is actually putting some depression around a valuation of a company. And so from an investor perspective, I actually like to look at those situations because I, might give, again, my personal opinion, it might give an opportunity to invest while the company is facing some headwinds, as long as their performance and their growth is still there. I think Hester Pierce is a really interesting SEC figure to follow on Twitter, certainly speaking her mind, and it'll be interesting to see what progress or what changes that they make following Biden's executive order. But big picture, I think that executive order essentially validated cryptocurrency and digital currencies as something that is here to stay. And what Biden asked for was a task force coordinated across all the different agencies. I think we will continue to see these lawsuits popping up, and as things happen, it's such a fast moving space that they're essentially prompting legislation or prompting the policy to be created as the new innovation comes up. And we went through a similar thing when we had the whole World Wide Web revolution. But from my perspective, there's a double-edged sword to the regulation. And so right now, actually, as an investor, I think it can actually be a positive thing.
Interesting. Mitch, anything to add?
Yeah, sure. And so, as Lou knows, I actually did graduate work at London School of Economics and wrote my dissertation on cryptocurrencies and state capacity and differences in regulatory outcomes. So this is something that I think is super interesting. And I actually think that regulation is good for the sector as long as it's smart regulation. But I think the key thing here is you're going to see divergence between countries. And I think we're already starting to see that, right? So you have states with more developed, or, I would say more, democratic political institutional barriers to kind of swift action. You're going to have now this kind of support base, these interest groups that are going to be backing crypto. I think you've already seen that stall a lot of negative regulation in the US. And so I'm actually kind of bullish on the long-term potential for crypto in the US. Clearly China, what's happened with the Bitcoin mining ban and the ban on financial institutions interacting with cryptocurrencies is super unhelpful if you're bullish on the space. And then you have kind of countries in between. I think Europe is unfortunately on the track for some negative regulation, and a good deal of interest bargaining needs to happen in Europe. But I think the UK saw what Europe was doing. And then about 2 weeks ago, I can't remember the exact official, but I think it was the Exchequer announced that he wanted to make the UK a hub for crypto activity. So I think you're going to see different states kind of take advantage of this gap, and there will always be kind of a home. But unfortunately, that might mean that investors or companies are going to have to move around, like they did when they had to move out of the US. 5 years ago when there was a uncertainty around the ICOs and whether or not things were securities or not. But overall, I'm quite bullish, and I think that we'll eventually get there. And that once that regulatory overhang, like when it's like almost not knowing what the regulations is worse than just having the regulation. Now everyone can decide move around it. So once we get it, I'm quite bullish.
Yeah, undoubtedly. I actually heard somebody recently describe it as also as regulation by neglect. If they just neglect to do anything, just creates uncertainty, which is kind of a lot of what's going on. But look, I thought a lot of great education went on. I'd really like to thank both of you. And just before we go, for the folks listening either live or on the replay, if they're interested in the products that you guys mentioned, where should they go? And Susan, why don't we start with you? Yep. Did we lose Susan?
You're on mute, Susan.
Just realized that. So you should be able to see my screen. This is
yeah. So go on.
This is an example of some of the companies. If you go to Linqto.com, you can see some of the companies that we've researched that are available for investment on the platform. Many of them in the Web3 and blockchain space, and then some others as well.
Okay, terrific. So thanks, Susan. And Mitch, where should people go if they want more information on Blockchain Co-Investors?
Hey, you can head to our website, blockchaincoinvestors.com. Again, our products are just for accredited investors or qualified buyers. So if you are an accredited investor, then you can email us at ir@blockchaincoinvestors.com, and we can give you access to our investor portal so you can see further information.
Okay, terrific. Thanks a lot, Susan. Thanks, Mitch. And thanks everybody for listening. See you soon.
Thanks, Lou.